For the last 54 days, Bitcoin's been on a solid run, up 21.6%. That's 17,000 bucks from the November crash low. It's broken out of two minor resistance levels at $90,000 and $94,000. So we're well on our way to those next levels. But I think we've been here all before. There is a term called a relief rally, which many of you understand, but there's still a select few that don't understand this concept. And I think it's important that we go through this in today's video again, along with the US markets, looking at the stock markets as they continue to grind higher, and also commodities. Some of our favorites here, like silver, hitting $92 an ounce, actually nearly 94 bucks before settling at 92, and of course gold at $4,600 an ounce. So if you haven't already, hit the like button, subscribe to the channel right down here. And there is the sale on TIA Pro along with your free reports. Links in the video description. I'll talk more about that later. But let's start off with Bitcoin and the continued relief rally. Nice and simply, as we've been talking about for months on end, we have looked at the correction for Bitcoin and then a relief rally into one of the resistance levels. That could be the high 90s, it could be low 100s. The idea or the point and the description of a relief rally is that it is a counter trend rally. If the macro trend is down, then any of the movements to the upside are typically called a counter trend rally, or they're called a relief rally. Typically, it's a relief rally from the first correction down. So we had the move to the low, and then this particular rally is a relief because of how the market is feeling. And from yesterday's video, we could definitely see there was a fair bit of feeling from the copium for the idea that we should shoot to a new all-time high. Of course, no one can give a guarantee. I don't have any guarantees. You don't have any guarantees. I wish we did. And no one in the world has a guarantee of where price goes next. That has been the case for trading and investing throughout history. But what we try and use are the tools, some of our indicators, things like sentiment, things like price action, things like time as well, to give us an understanding of what we think might happen next. And to take a position means you're either in the market or out of the market. Taking cash is a position, thinking that tomorrow and the next day and so on are going to have cheaper prices, so you're waiting for that time. Some people wait, and then you look for the confirmation to the upside that it's going to get ready for that next move. And that's how trading works. So there was a lot of thoughts that we were around 0.3, this dump from the top down to low into complacency. I've talked heaps of times before about markets. They don't have to hit a euphoria at the exact peak, And Bitcoin was similar to that when you only address it from the October 2025 top. We had extreme greed. This is your fear and greed index. Extreme greed on the 12th of July. What happened on the 12th of July? Well, you had this period into new all-time highs. That is extreme greed. That is somewhat euphoric. And on the 10th and the 11th, the sentiment within cryptocurrency online, like YouTube and X, that particular day, the 10th and the 11th, or those days, that 24-hour period, was quite extreme. And I even put it down to euphoric for my own trading and investing, for my own analysis, because of the analytics that came through on that day. It was absolutely wild. You could go back and have a look at some videos that happened on that day across the entire, say, crypto YouTube or X, and you might see similar things. So I think that those two particular days had the hallmarks of something like euphoria. But the argument would be, well, it's only on 1 or 2 days. It has to be over a long period, like what happened in 2021, like what happened in 2017, and so on. But again, in 2021, the top had a couple of days in extreme greed. There was some euphoria into the tops, but it wasn't like the first top. So in 2021, we had the first big blow off top, and the extreme greed actually happened pretty early on in the market. You can see this was just sat in extreme greed from November until it came down in January. I think that was where the first correction was. Yep, it came down from 42K to 28, and the percentage was relatively severe. It's about a 31%, something that we've seen a couple of times before already in this cycle. And the extreme greed, the euphoria, was really through that movement into 42. And the volume was really huge at that time as well. Pretty decent volume on the way up. And throughout the entire cycle, it didn't come back to that type of average volume. That was the highest average volume through that entire cycle. 2021, you had the highest volume, basically a lot of Bitcoin trading hands in January, in the late part of December, and then it did not reach that average price. This is blue or light gray line that you can see here. That's the 20 bar average in volume. So those periods were the peak. Of course, you had a peak here for COVID, but that's the extreme fear. So just looking at extreme greed early on, and we also saw a lot of whales and so on selling Bitcoin at that time. So they were selling up into this point because of how crazy the sentiment had become and the move had become. Everything got so extremely overbought. Correction came, and then the market showed us who was boss and kept going higher. So the point here is that sentiment in that cycle saw its peak in December 2020 and January 2021. It tried again in February, but the volume even dropped off. So basically the lifeblood of the market. And then you even had the price top in April when the sentiment was sitting around greed, not even in extreme greed, not even in that euphoria. The euphoria had started to shift to altcoin season. So that brings up the next point around altcoins. And I guess the misnomer is that the bull market has to have an altcoin season. This is something that is just related to cryptocurrencies, to what people tie to with Bitcoin and cryptos. In the stock market, it doesn't have to be that a small fragment of some sector, some random sector, has a blow off top move to get to an all-time high for the S&P. You don't need to see a popular sector like we saw in 2011, 2013, 3D printing. And then in 2018, we saw other sectors like the cannabis stocks that were going crazy. If you weren't around in markets at that time, and this is your first experience of being in markets, that's what happens almost every year. There is some sort of new thing on the block that takes everyone's attention, and they shoot up for a period of time, and then they go down for a much, much longer period of time. And so you saw all of these you saw all of these sectors that were just popping off. Cannabis stocks, and then it was plant-based stocks. Who remembers Beyond Meat, which is basically dead now? Can we find Beyond Meat? Yes, here it is. Beyond Meat, shot to shite. Look at that. 2019, it was all the talk, 240 bucks, and now 96 cents. How many years is that? We can all do the maths together. All-time high in 2019, down here now to 2026. That is actually a product. Whether you use it or not, it's a product. What about altcoins? Altcoins are mostly products that no one uses. They're vaporware, they're garbage. If you've ever been to Token in Singapore, or Token 2049, it's in Singapore, it's in Dubai. I've been to those events. You may have as well. You've been to any of these crypto events. It's mostly utter flipping garbage. And I guess it annoys me because it's just people standing around trying to get people to buy into these tokens, and they tell you about some dream, and then they see, oh, you're on YouTube. Can I tell you about my token? No, I don't want to fucking know about your token. It's going to go to zero. I don't want to have anything to do with your token. I don't want any part of it. I don't want to shill it. I don't want to know about that token. So that's my little bit of a rant when it comes to this. I've been in that environment over and over again, and many people have not. They haven't seen how this whole environment works. And then when we look at altcoins, they had their peak in May 2021. There was that April-May period. There was also a nice big peak in January 2018. Everything was blowing up. 2017, 2018 was the first time there. And then since then, it had a lower high. And again, in 2024, another lower high. And since then, put in lower lows. So you saw the example of Beyond Meats. I think, and which is contrary, I guess, to a lot of altcoin holders, that they're basically vaporware, and there is nothing to the majority of them. There are going to be some that are necessary and some that hold, some layer ones might be necessary. Obviously, privacy coins in the last few days, Monero. I actually think that's a worthwhile project, having some sort of privacy when it comes to cryptocurrency. That was the whole purpose of it in the first place. They have some purpose, but for the millions and millions of these coins, the majority of them have no purpose. So I think we've seen all of this before, where the misnomer is that you have to see an alt season to see a boom for Bitcoin, and the cycle isn't over until there's an altcoin season, yada yada. I don't subscribe to that. I once did, and at some point everyone's wrong. You're wrong for something, you get humbled, and then you have to realize that that might not be the case. And in the case of 2025, we saw Bitcoin go to a new all-time high. Meanwhile, cryptos mostly didn't. And if they did, they barely touched a new all-time high. And that happened just for a matter of days. Look at Ethereum. Touched a new all-time high, just scraped it there. It was in the room with us for about a day or two. And then it obviously came crashing down. I think one day we should see another, well, who knows? I don't even want to say that. I was going to say we should see a new all-time high. Maybe. We're sitting on 50%. That's not a bad spot for Ethereum. But I think trying to guarantee that, no one can guarantee it. I've never tried to guarantee this. I think that's just an absolute stupid place to be. You can't guarantee that anything is going to go to new highs. Solana in this cycle saw a brief new all-time high on the inauguration day and then basically collapsed from that point. Haven't seen it back, and is underneath its 50% for this cycle so far. Has a chance to get above it. It's only a few bucks away, but that's in a weaker position. Under 50%, weaker position. Above 50% has stronger. It's in a stronger position. And ETH is actually a little better here, just sitting above that 50% as it attempts to rally. As Bitcoin also attempts to rally here for its relief rally as we come full circle. And so the relief rally has broken through $95,000. We haven't seen any of the other signs that this is going to be a sustained rally that, I guess, continues on with a bull market and your whole 4-year cycle, whichever theory you subscribe to, is broken, and then the old super cycle theorists and 5-year cycle theorists and so on come back and say, well, this thing's going to new fresh highs. It is, obviously anything is possible, but I wouldn't say that I would be on that side. If it went to new all-time highs, I wouldn't say that I picked that at all. When that would occur, when I would say that the relief rally is invalidated, would be somewhere around 108, 109. It's got to do a lot of work and get back towards these highs here. You can see 108, 109. The previous tops that just poked its head around 112 also came back to test around that period there, around the 109. Little higher lows, and then the correction here in September that came back to 107 for a brief moment as the lows. The closing prices were just above that there. You can see here closing 108, another closing here 108, and it just found that support there on that level. So movements higher here are, I think, looking likely like a relief rally. Where does that level come in next? All right, we've talked a few times with a couple of numbers, main one being the 50% at around 103. In prior corrections and then relief rallies, relief meaning it's a counter trend move. So at the moment, the weekly is down and we're looking at a counter trend move to the upside. Bear market at 22, ran up to the 200-day moving average, touched it, pulled back. In terms of the 50% level, it fell very short of the 50%, which was at $51,000, but it touched the 38. So your nice fib number there. Came up, touched 38, and then got rejected. So what about, let's have a look at the 50-week as well while we're there. All right, touch a 50-week as well, which was almost dead on the 38. So I want to have a look at where we sit now. All right, 38, look at that. Bang on, beautiful looking confluence there with the price targets. So we have the 200-day, we have the 50-week, and right almost dead in the middle is the 50%, 50% being halfway. And this obviously goes on the chart that I'm showing here right now when the low comes in. So we had 103 as a target since Friday, the 21st of November. And here we are, 54 days later, still making our way towards that target of 103. The next thing we want to look at is the 38%. Where does that come in? Have we hit that yet? 98, almost to the dollar. We hit that in the last few hours. So if it's according to the prior fractal move, you can see it ran up to the yellow is our 50-week. It ran up to the 38% rally, this relief rally into the fib level. Now we're at the 38%, a few bucks away from the 50-week, which currently sits at 101, the 50% 103, and 106. Okay, so I'm throwing a lot of numbers. Let's clear those numbers for now. 98 hit. Next number looking at around the 100, 101. That's all we need to worry about to clear any sort of confusion there. Okay, looking good there for Bitcoin. What else is happening when it comes to USDT dominance? Well, we've been expecting a correction here into the 50% region and the prior tops. Let's clear a few lines off. Those tops and lows come in around 5%. Let's see right on the chart here, even going back a little further, got a couple more tops there as well. So just into that first swing, higher swing low, which funnily enough was the exact same thing that happened last cycle. 2021, you can see the market started to run higher, and then this region, you had the higher low form, another higher low form, tested the 50%, and then took off. So let's bring up those lines again. There it is. So that's what we're looking at for right now. It's getting closer, currently sitting at 5.7, the number 5.3. So yeah, not too far away. I think we should see that in the next 1 to 2 weeks. And as we talked about last week, this was the time frame that we're watching for the move to get underway. If it's going to work, you need to see that move happen in that next week. And here we are. This time, this repeating pattern starts in 4 days. And this is the period that we're at now. We've got that breakout beginning this week because that's typically what we've seen Bitcoin do around this period when these sets of circumstances arise. Sets of circumstances, essentially, you've got in this case, the bear market and the consolidation, the low volatility that had happened through these last 50 odd days, last 7 weeks, and it's time for the market to do something. We know from history that markets typically stuff around for about 80% of the time, and then the move happens in about 20% of the time. Some of those numbers could shift a bit if you've done your back testing, maybe it's 1585, but more or less, nice round numbers. You don't really have a move for about 80% of the time, and then 20% of the time it starts to move. You may have seen that we've reviewed that many times in the analysis on the channel before. You can see it just grinding, then the move happens, grinding, move happens for a few weeks, grinding, and then it happens. I think that's what we're coming to right now. Now, the sentiment has finally broken out of fear and neutral for the first time in 97 days. 97 days. This is the longest stretch without greed, the longest stretch of uncertainty and fear through this entire cycle since we broke out to 20 odd grand. We got into the low. This was the base of the low. It broke out. So this is the longest period, which is still not a great sign for the bull market resuming, having had so much time in that fear, which people normally would think is a good sign that the low is in. But like we saw in prior cycles, and this is 2022, the time frame in uncertainty and fear was 32 days. Let me just clear that line up there so you can see 32 days from fear before it dropped into neutral, and then from neutral before it jumped into greed. That was greed here, dropped into neutral, and then neutral jumping up into greed. And that greed point is the exact point that we're looking for now when it comes to the relief rally finally finding its top, then consolidating, potentially distributing, which is what happened last time, and then you can see it start to come back down. So a little bit of a telling sign if this is going to be the relief rally, and this is sort of the key area now, is that price will stall up around the resistance levels that we've watched, that I've mentioned before in the video, and then it starts to break down back beneath the previous swing tops. So you can zoom in and have a look at this for yourself. Tops, tops, the market found resistance at these levels. Sellers came in right here, so that's what's happening. And then you get the breakout around here into that relief rally top. If I zoom out, you can see that exactly what happened down into this top. And then this was the period that the market was trying to mount a case, mount a story that it wanted to go back up. This is where the bulls are saying, you bears are wrong. It's ready to go back up. We've broken out. Hold on for the ride. That's what needed to happen here, but it didn't. And the bears came back. The selling continued. The selling picked up again. And on that particular bar there, April 6th, you can see the volume picked up, meaning there was more selling coming into the game. And it broke underneath all of those tops that were once resistance. So that closed underneath. That's just the first sign that it might not come back. The rest of the story has to play out. The bulls have to come back, buy up some of the dips, and they think it's going to come back around here. The volume increased again on the way down. You can see it's increasing compared to the white bars. See the white bars in this zone, which are the up days? They didn't have the same sort of lifeblood in them. They didn't have the energy. They didn't have the momentum. The momentum was with the downside. The momentum's with the downside. The momentum's with the downside. The momentum's with the downside. Like it's just there on the chart, and that's what we're reading here. And you see it again. Another lower close beneath those bottoms. Bulls trying to hold out. They're right here. They're telling you buy the dip, buy the dip. It starts to rally, and then pretty much none of them are left. And it basically just shits the bed. Absolutely fries them all. So what is the good news in all of that? Well, that just gets us closer to a low and a time period that we've been watching, which is somewhere around Q3. So Q3 is out here, July to September. We know roughly 12 months from the top is around October. And if the price is able to grind and hold the 50%, then I think we have a good chance, a good case to build that we could see a new all-time high before our 18-year cycle is basically all done. All the peaks are in for asset classes, and then we start the 4-year part of the cycle, which is your peak and collapse, until we reset and go again. And so if you've never been through one of these, which most of us haven't, or if we have, we've been unaware of the cycle, this is most likely going to be a lot worse than what we see that we saw in 2020, or the correction in 2022, or the correction in 2018. But it gives the most opportunity, the absolute most opportunity, mostly across the board, stock markets, real estate, of course, businesses, if that's what you're into as well, but you need to be cashed up at that time. And so I don't think there's any harm in, putting some cash aside through these periods so that when that occurs, you're ready. But as I said earlier, as I've said many times before, is, most people should understand, if you've been trading or investing for some time, or if you're in business for yourself, there are no guarantees in life. I think everyone should know that as well. So there's no guarantees that the peak is today. It could keep running, which is why you still keep a little bit in the market, or a good chunk that you think is necessary. And then when this period comes, that's where we start to go a little bit harder. So we've got a time frame here. So far, everything has worked out as per plan. It's happened many, many times in history. Over 200 years worth of data to get to this point. We're at the peaks now, 26 for real estate, possibly 27 for stock markets. And then we look towards 2028. I said I would look at gold and silver. They also hit new all-time highs, $4,600 yesterday. Slowing a little here, but still trend is up, so we have to keep following the trend. Silver at 90, but having a pullback after hitting 93.70. And in the next videos, I'll go through a little more detail when it comes to the ratios of silver, gold, and the stock markets. Here's just a little precursor. As we followed with the stock markets, which were heading higher, they obviously they stalled, but silver took off, and that has broken down the SPX, so the S&P 500 and silver chart. And typically we see those occur through these stages, like the end stage of any cycle. It doesn't happen every cycle, You can see even in 87 and 89, it started to rise. So that was the peak of the last cycle. So I'm not in the band, not in the camp that metals have to peak at the end of every cycle, but we happen to be in a cycle now where metals are peaking towards the end of all of the cycles. And so those that follow, the war cycle and the fourth turning and so on, we're coming to a pretty significant turning point here towards the end of the 2020s. Now, in regards to silver's top and the S&P 500, we've hit a level here at 78. And that's been where the market has found some resistance and support in the past. You can see back in 1990, 1994, 1961, 1966, 1972, and just short of that in 1930. But it's a bit of a reasonable level here to have at least a temporary low, maybe a local low, maybe finds a bit of support here. Silver has a pullback. SPY just holds its ground. Otherwise, and yep, it's the old up, down, sideways. A breakdown here, that's going to be even stronger for silver, and we look towards the next level. I'm looking somewhere around 50 and 65. You can see those previous two levels there. So we'll keep watching that. I'll talk more about this in future videos, as I think this one's gone on long enough. I've got heaps to cover when it comes to market sentiment, especially as the stock markets are nearing their highs again with these last couple of days. And of course, go through some of that economic data that has come out over the last few days, along with things like the inflation. So stick around, hit the like, subscribe to the channel if you haven't already, and grab your free reports that have come out this week. Check your email inboxes. I'll see you guys back at the next video. Thanks for listening to me and my altcoin rants at the beginning of the video. If you enjoyed that, I don't know, head to the comments section, and on the way, like, subscribe, yada, yada. All right, guys, see you in the next video. Take care. Peace out.